And we see commodity prices quite volatile. We see oil moving up and down for the past few days now, and we're seeing the price up after it dropped yesterday. And we're also seeing grain prices also rise, at this time because we've seen that Russia did not hold on to their own end of the bargain, talking about allowing grains actually flow to countries that actually need it at this point. Well, now for Commodities Market Update, we have Olumayowa Ige, Analyst Financial Derivatives Company, join us right here in the studio. Great to have you. Hello, Laddie. Thank you for having me. Yeah, so the volatility continues in the oil market, and we're seeing it at $106. I was thinking it's going to stay below, $100 for a while with demand concerns and, with the Fed planning to raise rates even higher. What are you seeing in that market? Well, the increase we've currently seen is also as a result of the slight weakening in the U.S. dollar, right? We know that when the U.S. dollar is weak, more countries are able to purchase commodities. Countries with other currencies are able to purchase commodities. This is because commodities are oftentimes, like oil, are US denominated, right? And so this is what we saw. This is what happened, and this is what led to the slight increase in the price of oil that we saw, I think, over the past one day. And also the US equities market was stronger, and also this also played a part in the price of oil. But in the long term, there's still the concern of Fed increasing their rates. We know that when the Fed increases their rates, it's possible that we should see a slowdown in economic activities, and then this would most likely affect demand for oil. But at the same time, we're seeing, supply concerns, also playing, a part, talking about the prices there. But how do you think the price is going to fare, going forward at this point? I think that the prices might still be a bit volatile, right? Also because, yes, you mentioned supply fares. We have OPEC, but we know that OPEC controls the majority of production, at least the OPEC producing nations. We know Biden is, I think, is scheduled to meet the president of Saudi Arabia to discuss increasing their production output. Oh, is meeting him again, or I think he's supposed to. Okay, then yeah. I think he's supposed to meet him for that. But then there's still fears as to capacity, right? OPEC controls the quota for all of these companies. I know OPEC is meeting August 3rd, right? But they already have set quotas for August. They increased by about 400 or 600 million barrels per day for countries. So this is already in place. But I think that we're still going to see a bit of that volatility if the Fed's rate increase hike would most likely, it should slow down inflation, and then maybe this is when. But when that happens, the US dollar would actually be stronger. Right. And a stronger US dollar would also affect oil prices, and so maybe it might decline a bit. And we actually need to see oil prices, down at this time. And we know Joe Biden has been doing all he can, to bring, those prices down. But it seems it's not working. Well, when you put it, inflation is you can only try. There are still other factors involved. Biden doesn't control the supply of all the world. You have different countries, right? And then we have China, for instance. We have the lockdowns in China. That's also sparking fear because their imports in June declined to the levels of 2018 or so. And so that's a cause of concern, right? And then you also have Libya. Libya is planning to increase supply. You have all of these things that Biden doesn't necessarily control. And then you have the Russia-Ukraine war still playing its own part. So yes, he will try his best, but there are also other factors at play that we only hope that all these measures begin to show results in the coming months. And all these other headwinds don't look like they're abating anytime soon. The war is still raging on, strong. And the inflation is still rising at this point. Energy prices still going up, even though we're done with the first half of the year. But looking at PMS here in Nigeria, we're selling between 170 naira and maybe 180 in some parts. How are you seeing this impacting commodity prices? Well, definitely we're going to see that in our inflation. We should definitely see that in our inflation figures for the end of the month. Already we saw June inflation figures rise to 18.6, and one of the drivers for that was actually petrol, diesel prices, and then the naira devaluation. Those were major drivers of the inflation figures for the previous month. And so with these prices, we are seeing 170. I think is with these prices, 170 in Lagos, higher in other parts of the country, and this is also because of distance, right? It will reflect in the prices. And so definitely that's still going to feed in to the cost of commodities. We bring food from the north, from the inner states, and they come to Lagos. All these things also feed into the prices. And so we're going to see more price increases in the coming month and coming months if and I don't even see this actually changing. So definitely we'll see the impact on inflation in the coming months.
And, looking at, all these energy costs, rising in Nigeria, now, what do you think, can be a short-term solution, to create some kind of buffer for, producers and, the manufacturers at this point?
At this point, you think that the buffer would be more forex, right? For instance, we know that manufacturers have been complaining that they only get about 5% from the CBN, right? And so they've had to source most of their forex from the BDCs, from the parallel market, different sources. And so this is reflecting in the costs of commodities. So you might actually think, oh, CBN should increase their supply of forex, yeah. FX. But then this year we're looking at it. I don't think we've gotten any remittances from the NNPC to the CBN this year, and so the CBN too is having that issue, right? They haven't had an auction with the banks this year, or in the past 1 month rather, I think, and so we're seeing it affect PTAs and definitely manufacturing sector. But the short term. For all prices, I think the federal government is already trying their best with the subsidy. I think that's the best that they're actually doing at this particular point.
That subsidy is gulping too much of our revenue at this point.
Too much of revenue or debt. And
yeah, we were seeing debt actually debt servicing, rise more than revenue we're getting in the country. All right, now let's look at FX, as you talked about before. You see it's broken that 660 naira psychological point. How are you seeing it?
Well, should we say it's almost a mess a bit, because when you talk to the BDCs, they are equally frustrated, right? They're equally frustrated. There's an arbitrage going on, the price differentiation.
And it's getting really wide.
It's getting really wide, and the reason is because there's no anchor price. They're not getting from the CBN anymore. So you have a situation where this person gets from this source at 620, he sells at 630 and thinks he has made a spread, and then he hears that they're now selling at 640, that kind of thing. And that's happening a lot now, and that volatility is really based on the fact that there's no exchange, there's no anchor price. Even in developed nations, we know that there are exchanges where in the parallel market that the prices are more or less determined, and so from that price, other BDCs of the sort come up with their buying and selling prices, but we're not having that here, and that's causing a lot of volatility. And also back to when we look at the excess demand, there's a lot of demand being pushed to the parallel market, and there also will be constraint for the supply constraint, and so that's also impacting the price that we see currently.
And talking about demand, do you see that tapering going forward at this point?
No, not in the short term, because we are a heavily import-dependent nation, right? And so our manufacturers need the dollar for manufacturing to import raw materials. Everyone needs dollar. And then, surprisingly, this is the summer period, right? As much as we say the economy is a bit shaky, people are still going for their summer vacations, and so there's increased demand for the dollar. And also we're starting another school season. September is resumption season for schools abroad. Children are still going to go to school. They will need foreign exchange, and so in this particular period there's increased demand, and so in the short term I think that we might still see a bit of that.
And all of this is also playing into the price of bread. I talked about how the bread makers have called off their strike. They've hiked the price by about 10, and 20%. How do you see consumers reacting to this price hike?
So for consumers, we would most likely see a shift to other commodities. But then also when you look at inflation and look at other commodities, the prices are also increasing. They're also rising. So some people would actually have to reduce the quantity of which they consume currently. But then let's look at the bright side with the Russia-Ukraine deal that we hope would reduce the price of wheat. Maybe that decline in price of wheat will reflect in prices, and then maybe it would help reduce the cost of bread manufacturers because they import their flour, their wheat flour. But also then there's also the naira devaluation. Right.
And sugar is also playing into this cost.
Sugar is playing into the cost. And then if we break it down, actually, we look at eggs, we look at diesel. All of these things come up in the price of bread. But then if we're having a decline in one aspect of production, wheat, might actually help in the short term. But then we're going into planting season harvest season pretty soon, and so we're having likes of new yam, and so let's hope that would actually should reduce the prices of commodities like yam and all, and so we'll see a substitute, people shifting to a substitute. We might see more of that because we have a decline in prices, or a bit of a decline in prices of other commodities.
And talking about wheat prices now, do you think there's hope, for Ukraine to get, much of those grains, out of their ports at this time? Because we've seen, Russia actually kind of change the game when it comes to that agreement.
Well, according to Russia, they say they didn't change the game, that it's not affecting Ukrainian ports, right? But then the thing is, how many shipping companies will be willing to go into that part of the world to export grain? It's not secure for them. So Ukraine will have to find ways of increasing their shipping capacity to bring their grains out of the ports. But at the moment, there's a bit of hope, but with what happened with the Odessa strike, it calls into question. It's possible that the United Nations meets with them again, and then they come up with another sort of agreement that, we've come up with this agreement, you need to stay away from this area. It's possible that happens, since they were able to sit down in the first place to come up with this treaty that's valid for about 120 days.
Now we see commodity traders still, profiting from all the volatility that's happening, in most of this market. Anyway, the NLC is commencing nationwide protests, solidarity with ASU, Shanu, and NASU. What can we expect from that?
Well, it's a warning strike,
right.
First of all. A warning strike is still better than a riot, right? The government has come up with the different promises, right? But we know that promises are different from policies, right? Promises do not have any backing of action. Policies are the ones that come up with actions that will produce the results that people need. When we look at it, the students have been home for too long. Right, and then their parents are the NLC, everybody being involved. They also have children part of this strike. So it's a concern. So we hope that this strike will actually cause the government to move from the part of promises to actual policies and come up with actions that would actually produce the results that the people actually desire and need.
All right, so what's happening with the other agricultural commodities now?
Well, we've seen, like I said, new yam is out. We've seen yam prices decline from about 2,000 to 1,800. We still see prices of beans going up, rice going up. But then like I said, we're going into Q3, harvest season, and so we hope that we will see a bit of that. But then insecurity is still a major part. We hope that the harvests are actually sizable enough to meet the supply of the harvest, is sizable to meet the demand, and so hopefully we can actually see the decline in prices that we actually need to see.
Because it seems like it almost seems impossible that we might actually see these prices actually come down, or do they just stay there or something?
They wouldn't just stay there. I mean, if we pick yam, for example, where
all these headwinds actually
disappear, we would definitely see. Now, the price decline that we will see might not be as much as we hope to see from previous years, but we should see a bit of a decline in the prices in the coming quarter.
Right, and yesterday the stock market actually opened quite down, about 1.11%, with a loss about 55 million from the market cap. How are you seeing that market?
It started about some days before now, right? And then when we look at it, there are reasons for it. The inflation figures came out, it was higher. The investors will be cautious, right? We were looking forward to the MPC meeting. It came out.
Because I was thinking at some point that the inflation figures don't really matter to investors here.
Well, it matters because they look at it. The inflation figures would kind of determine what the MPC meeting would, the outcome of the MPC meeting, what the MPC rate would be, right? And so we saw the increase. Like what's happening in the US and Nigeria has started, we saw an increase in interest rates by about 100 basis points, right? And so when that happens, when you anticipate an increase in interest rates, people are cautious. They're waiting to see, to move into the fixed income space because there's been an increase in interest rates. But what we've seen after the MPC, for instance, is that we didn't really see much of a difference in the fixed income space. It was only, I think, the 364-day interest that increased slightly. That was what we saw. We didn't see an impact on the 91-day and 160-day results. But then that is one. And also, let's not forget that H1 is running up. We're anticipating results of companies in the coming quarter. And then, like we said, all these issues of Naira devaluation, inflation, it would most likely impact the bottom line of these companies. So investors are also cautious. But then when we look at what happened, for instance, yesterday, we saw that there was a huge decline in daily turnover, about 17.9% or so. And then also looking at the companies, how the companies, what happened to the companies there, we saw a lot of some penny stocks gain, but then the bellwether stocks, when we look at them, we had MTN, I think had a decline from 230 to about 2, to 130.
It was a big drop.
It was a big drop,
right?
And that impacted the market, which is why we saw that the decline for yesterday was was larger than the decline that we've seen in previous days.
All right, we'll leave it there now. Well, the central bank governor said that they will continue to hike, as much as is needed. So equity markets are going to have a lot to deal with at this point. Thank you so much, Maiwa Ege, financial analyst at Financial Derivatives Company. It was great having you.
Thank you for having me. All
right, now, so after the break, we'll take a look at Nigeria's supply chain as inflation bites. That's in a moment. Just stay with us. This is Business Morning.